Welcome everyone, and this is Startup Central right here on ET Now. I'm Avan Dabash. This is the first and only daily show in India dedicated to startups and entrepreneurship. And today the angel demon is back, and that is exactly what we will be talking about with the income tax notices being sent to startups. So it's a power pack lineup for you over the next half hour. So in what is again triggered tax issues, several startups are receiving income tax notices on the angel funding that they have received a few years ago. Remember, we had a special on it just a couple of weeks ago. But let's understand why this issue is rearing its head again. What does it mean for the startups? We've got a power pack panel as well. But first up, Rahul Dayama has all the details from Bengaluru, and he now joins in on the show. Rahul, the DIPP had issued a clarification on this matter. So what's the issue again?
Avan, that's right. It seems like the angel tax issue is resurfacing again and again. We've been talking about it from the start of the year. So the DIPP notification that came in April spoke about how startups that are registered with DIPP, say post April 2016, will be exempt from the angel tax owing to certain riders. That being that the valuation of the startup has to be less than 10 crore. Also, on a case-by-case basis, each proposal will be cleared by a panel that will look into it. But even entrepreneurs that time had said that it's a cumbersome process. It is a time-consuming process because the panel only happens to sit once or twice a month, and it's difficult to really push it through. So now a range of entrepreneurs have again started receiving these IT notices that are very similar to what were previously being awarded. And the reason why the issue is popping up again is startups who had raised this angel funding even prior April 2018 when the notification was issued, they have got them. And what they're asking for is clarification in terms of valuation of the startup, and to go on to pay 30% of the investments that they have raised as an angel tax. And that's really a big burden on startups, because remember, these are early stage ventures. Every single rupee, so to say, that they raise with difficulty is important for them to grow their business. And with this regulatory hurdles time and again, and the tax ban at their back, it's difficult to execute. In fact, you'll hear an entrepreneur talk about how some of the startups have been forced to shut down owing to what is really happening. So we will have to wait and see what happens from now, because entrepreneurs are planning to approach the government. The finance ministry has said that they're open to this matter, but the fact that confusion is coming again and again, there are regulatory challenges that need to be addressed.
All right, that is exactly what we will be taking on further. Let's bring on board our guests and delve into the issue full throttle. Abey Zakaria, CEO Goodbox, Padmaja Ruparel, Indian Angel Network, and Sreejith, the founder of True Elements, are all joining in right now on the show. Great to have you all on board. Padmaja, thank you so much for joining in. To begin with you, one recurring thing that we have heard is the angel tax issue. As someone who has been associated with IAN, what exactly are you making of this? And, what exactly do you think is still causing so much confusion?
So thank you. I'm delighted to be on the panel. I must say that, this government has done a lot for startups, be it from Niti Aayog, be it from DIPP, and I must also put on record that SEBI has also done various things to encourage and enable startups to not only raise money but also grow. However, this one issue on tax, and now you're right, your colleague just mentioned startups are receiving notices, but even angel investors are receiving notices. So this one issue of income tax, it's almost like the demon in the pack. It's going to almost kill the startup ecosystem, because anyway, startups find it so difficult to raise money. It's not easy at all. We've just been able to, over the last 10 years, 12 years since IAN started this whole angel investing asset class, that we've got it going. But the whole aggression on income tax will just kill it, because investors will just come back. We are already saying, why do I need this pain? So honestly, this needs to be resolved, and it needs to be. This is going to kill the startup ecosystem. The notices are coming now also to investors, for that matter.
Okay, so this is being seen as a big setback, and in fact, Sreejith, Padmaja used strong words as this is going to kill the startup industry. Do you concur with that? Because if you could also clear this for us, there's a DIPP notification that came in April this year. Why is the issue resurfacing time and again? Sreejith, do we have you with us? Okay, I think we'll just probably be reconnecting that line before we proceed with his perspective. But Padmaja, you've been fairly vocal in describing how this is going to be a huge dampener for the sector. How much of a drop in angel investments do you think will be from this? Early stage funding as well has taken a massive hit.
No, I think the point is that nobody wants extra work and they don't want to go through income tax scrutiny. Do remember that who's investing in startups? These are HNIs. And startup investment is only a sliver of their portfolio. So their perspective could be that, why do I want to go through this for a very small sliver of my portfolio? It is the highest reward asset class. I don't deny that. But this is not going to help because startups will not grow at the way they want to grow. And Rohit, your colleague mentioned that money invested in a company as a capital being considered as income and being taxed means that much money less for the startup to grow. So the value that the investor would get is lesser purely because that much tax money would not be deployed. So it becomes less attractive for investors. And the pain of it is not helpful at all.
Okay, that's interesting. Abey Zakaria is with us, CEO Goodbox. Thanks for taking time out and joining in. Now, you've received this notice recently. Can you take us through what exactly are the contents of the notice? What are the clarifications that they are seeking, Abey?
Yeah, hi. We got a notice on one of our angel rounds, which we had raised in 2016-17 assessment year. And basically they asked why the share premium is so high, etc. So we have given the relevant explanation. And in fact, an order has also come where some tax is now due, right? So this is basically, it disturbs us a lot because it is against the startup culture. The entrepreneurs can't think freely, and I know of many people who are either have shut down their companies or will be forced to shut down if these tax have to be paid. And there are very, very strong clauses on penalties also, where penalties can come in. So one of the things is we should look at how to even reverse some of the orders which have come in place. So government should definitely look what has happened in the last 10-15 days and work on that.
Okay, Sreejith, let's get your opinion in as well. You were hearing out Padmaja fairly vocal on what this does to the startup space as a whole. It kills it, and for us there is, if you could just help clear this, because there was a DIPP notification that came in April. Why is this issue resurfacing?
Okay, so 7 months back, Padmaja and myself were in the same panel of Startup Central discussing the same issue and assuming that with that April notification things have settled down, but it hasn't. What is the situation currently is people who have raised money, anybody who has raised money prior to that April 2018 notification is getting an order if they have raised on a share premium. Okay, now the issues are two. One, that notification didn't clearly classify or call out what is the action item for people who have raised money prior to that. Second, even for people who are raising currently, the process being laid out is very cumbersome. They are expecting a startup who is at an angel stage to go and get a mercantile banker's valuation, which will cost upwards of 1 lakh, and then wait and get ITR of all the potential investors. Getting money itself is so tough, and you are supposed to get an ITR, last 3 years ITR of a potential investor who is intending to pay you. I don't know in which world would we get that. Ironically, only 4 startups have applied under IMB since April. That talks itself, right? So that means it's not easy to get money first. And now along with money, you want the ITR, last 3 ITRs of potential investor. Then you go and submit to the interministerial board who sits once in a month. And then they will approve whether the valuation which you are raising the money and the value at which the investor is putting in, is it acceptable? This is going to slow down. I completely agree to what Padmaja told. At least this government has got clarity as to what is acceptable and what is not. But what is acceptable itself is great, right? Now, in my case, I got an order last year. I filed an appeal. I have filed for an IMB and I'm waiting. Look at Abey's case. He just got an order. And there are so many people who have got orders in the last 15 days because they have a cutoff of giving orders for all the cases which are pending more than 24 months by December 31st. So situation hasn't improved for the founders. And as Padmaja has told, now the problem has increased by even notices going to angel investors. One of the founder who is in our group, there are around 70 member founders group we have in WhatsApp. All of us are people who have got orders. One of the member have got an order on a VC investment. That's absurd. A VC who is a SEBI approved vehicle is being questioned by an AO who doesn't understand DCF method of valuation. We don't know where do we go. We are completely lost. Now, the time and energy we are spending in convincing an AO who doesn't accept any valuation except an asset-based, NAV-based is tough call for us, right? We will focus on business or we'll focus behind getting all this information and going and fielding with AO. So we have got immense support from DIPP since January when I raised this issue in this 2018 January to April, we got good 9-10 notifications, better clarity, but the problem is still not solved.
All right. Padmaja, come in on, the IT department, because their contention is that unaccounted money is being routed through startups. What's the harm in a clarification then being sought if you're just looking at it from their perspective? Because, the way they're after startups, is it the way that they're after startups? Is that what's bothering?
No, I think, they have a valid point. I agree with you that, if there is misuse, then it should surely be penalized. But the point is you need to first figure out who are the bad apples. You can't be doing a blanket bombing and then saying, oh, these were the 5 which were a problem, right? Because you cannot be killing genuine businesses, and that's what startups are about. They are the ones who are creating the new value. They are the ones who are creating jobs. I mean, the entire startup ecosystem report that has come out from the government, they're already saying that in the first 1.5 years, 11 jobs are being created by each startup on an average. So it's a job creating machine. Don't stop that. You need to figure out a strategy of finding the bad apples by not killing all the good apples. That's important. I don't think from the startup ecosystem and from the angel investing ecosystem, we are saying that, stop it. We are saying figure out a carve out that genuine businesses, startups don't get impacted. Genuine investors who are putting in post-tax paid money into startups are not impacted.
Abey, come in here. How has this constant notices from the IT department hurt your business? Are you seeing also, angel investors backing off from the scene owing to poor clarity?
See, basically, when a founder gets a notice, first thing that comes to mind is it's a distraction from his normal business. Building a business in itself is very, very tough, especially entrepreneurship. So it gives sleepless nights as such. So on top of that, you get an IT notice, then somebody has to really spend time ensuring the answers are right. And then you have to engage your CA who charges you extra, maybe ₹1 lakh for just replying to the scrutiny, right? All of this is unnecessary hassle for the founder. He should be focusing on the problem statement and solving it. That is one part of it. Then imagine if I am raising, say, 60 lakh rupees in angel funding and I have to tell the angel, hey, you know what, 20 lakhs has to go into paying the taxes. That is something which will be a big deterrent. Even the founders can't think like that, right? So or imagine if I have to keep it aside because I have no idea how the AO will react to this, whether he'll take my explanation or not, right? So the only way I can do it then would be provision that amount. So all of these can come as an afterthought for entrepreneurs who have gone through it, especially youngsters who have no idea about what's happening, how to raise money, etc. They are, I'm sure, in a worse place. And imagine the current rule which says merchant banker should issue a certification. Merchant banker, on what basis will he issue? The VCs themselves find it difficult to assign a value to a startup, right, who are the experts in the domain. So there are many questions which need to be answered, and for the founder it can get very disturbing. I know of a founder who got a notice 2 days back, and he told me he didn't sleep the whole night. He got an order for 21 lakh rupees of tax to be paid, and the penalty can go up to 3x. It can give a lot of trauma to the people. That's what I would say.
Yeah, causing sleepless nights really, and as you said, it takes away from really running the business, which is tough enough as it is. Let's get in your perspective then, Sreejith. You wrote to the DIPP, you wrote to the Finance Ministry last time when it came to these issues. What is the plan now? Are you going to reach out collectively to the government again? What's the game plan?
The only good thing which has happened of all this situation is there is a group of founders who are working together. Now, ironically, in the WhatsApp group, there are founders from competing brands on the same platform working towards one thing. So in the market, we are competitors, but government united us. Okay, so we have around 70-75 founders who are together now. We are taking the help of industry bodies like IVCA. We have got help from iSpirit Foundation. So various startup aggregators and organizations are helping us in again reaching out to DIPP. So we have been consistently asking just to support. One, you want to come, and as Padmaja has told, there are bad apples. You want to come behind and figure out who are they. You ask whatever data you want on the source of fund of investors, you ITR, they will give us. Why should it be come through us? Now, after money is raised, an investor may not be comfortable giving his complete asset value, complete net worth, complete ITR to an invested company, right? So you look at the source of fund. Every startup who has raised money is raised money in a legal way. Money has come in through bank. There is no cash transaction. All the investors, ITR and PAN records, not ITR, PAN records would be there with startup. You look at source of fund, whatever support government requires, we are in it. Because we want to create a clean ecosystem here, and whatever is support required, we would. Second, you want to look at just to reduce the pain. You want to go and classify to who can invest. As of now, what you have told is anybody whose net worth is more than 2 crore and whose annual income is more than 25 lakh. Instead of putting just a blanket category, you classify who can invest. Let only those accredited people come and invest. We are fine. Okay. Second, look at companies whose value is going down drastically, but don't just go and blanket bomb, as Padmaja told, give an orders and notice to all these startups who have raised money. Okay. Have a mechanism of filtering out, because in the process of figuring out 4 or 5 startup which may have source funds coming from illegal to whatever, black money, whatever, you are actually going and messing up with good 8,000-9,000 startups which came into existence post 2012 after this clause came into existence. So have an accredited investor category, make it simplified. Now, IMD is a painful process. I prepared for 3 months to get that application ready. I had to get ITRs from all my 4 angel investors. I had to get a net asset value of each investor at the time of investment. And then mercantile banker. Then get this all online and wait for that to get approved or that to be heard. So make it easier. So as our Prime Minister has been telling, we are a digital country, things have moved faster. This is one place where we want things to be faster because we are creating jobs. So make it easier for the ecosystem to flourish. And there are good practices. We can just borrow from the matured markets like US. Just borrow it. Let's not re-engineer. Just borrow it because it's been working there. Let's just borrow it. Rather than that, we are giving an ambiguous definition for an AO who doesn't understand a DCF valuation method to go and decide as to what my value should be. Sorry, that's not the way it can be handled.
Make it easier for the startup system to flourish, not harder. That is the key takeaway. Padmaja, thank you so much for joining in on this chat, as well as Sreejith and Abey. Appreciate your thoughts, and we understand how vocal and vociferous you are on what exactly this is going to do. Really dampen sentiment, and as Padmaja said, kill the startup space as a whole. Thank you all for joining in. Okay, well, let's move away from that topic and focus in on some perspective from an individual company, and we're talking about IT major Capgemini. They employ more than 1 lakh people in India, and now they're set to ramp up their hiring over the coming years. This comes even as they announced a range of top-level management changes to increase focus in the country. My colleague Rahul Dayama caught up with the global COO, and he talks a little bit about their growth plans.
As you heard from Thierry, I think we are seeing very robust growth. Over last 3 years, we've seen very consistent growth, and we clearly see a future where their growth will continue. This definitely translates into a very significant hiring and people development plans for us. This year and next 2-3 years, we have plans, and we've already executed fair amount of it. Much higher number of campus graduates than we ever even did last year or year before that. So clearly, we are seeing robust trend. We've actually helped it through also changing our compensation plans for campuses. So we've increased it across the various campuses we hire. So very clearly, both on campuses and also in the lateral market, we see a very strong demand. And we'll continue to grow.
All right. You spoke about the fact that compensations, has sort of been increased for. Could you give us some details? They've for the longest time hovered around 3.5 lakh per annum for entry-level graduates. We're talking about other companies also looking to sort of streamline it and offer. Could you take us through some more details on, how does it look like right now?
So what we've done is we moved it at least by 10 to 15% for Capgemini. So what we are hiring, and across the stack. So we hire it from what we call as premium colleges, the IITs, and then we do it through triple IITs and also the good schools across India. And across the board, we were doing tiered hiring. And for each of these grades, we at least increased by 15 to 20%. In some cases, it's 20%. So clearly, we see the right talent in the market, and we'll continue to invest.
All right. Coming to you, we were discussing how you've spent a lot of time here in India, so much of travel over the last 15 years. What's your view of this boom that we are seeing from startups, small tech companies who are now revolutionizing the way, companies really conduct business? What's your take on the Indian startup ecosystem? And I'd, of course, supplement it by asking Capgemini's plans in the space here.
Oh, as a service company in the technology space, obviously, working with technology partners is part of our, activity. And we are working and have been working with the biggest players over the last 50 years. Now, it is true that in addition to those big players that are strong partners for us, we have now a growing proportion of smaller firms that are very specific, very strong in specific areas in technology space. And we have developed our own ecosystem of startups in order to respond to, business or technology challenges of our customers. So together with these startups, we are working on solutions. We are working on offerings that we are taking to our customers. Working with these startups every day is part of our, DNA.
Got it. But Ashwin, from an India standpoint, would you not rule out acquisitions or, acqui-hires, so to say? Because if we talk about large-scale MNCs and tech companies, they've finally realized the potential, about startups, a lot of them acqui-hires. And would you not rule that out? Is that something that's on your radar?
So for acquisitions, I will leave it for Thierry to answer. But what I would definitely say is to build on what Thierry said. We in India, I think NASSCOM has done a very good job of building a very strong ecosystem. And then also we work with T-Hub. As Capgemini, we have something called as Applied Innovation Exchange. And in this exchange, we work across globally. We work with local startup ecosystems. And in India, then we work very closely with NASSCOM and T-Hub to understand what are the new startups, especially in the AI space or emerging technologies. And we definitely take them to our clients. We build solutions leveraging some of these startups and we take these solutions to our clients.